morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, let's look at the headlines. The death toll from the coronavirus outbreak rises to 636. The Chinese doctor who warned of the outbreak last year has died as well. India's domestic air passenger traffic grows only 5.1% in 2019, according to data from the IATA. This is the first single-digit growth in 4 years. Data from the Reserve Bank of India suggests that external commercial borrowings of corporates has doubled compared to last year. This was by a domestic liquidity crisis and easing of rules for overseas borrowing. Hero MotoCorp delivers an operational beat in the third quarter. Lower taxes boost profitability, while lower input costs and aid margin expansion. And Tata Steel, UPL, Britannia and NTPC will be the 4 nifty companies reporting their earnings today. Let's talk about the US markets now. They continued to shrug off fears of the coronavirus, registering fresh record highs on Thursday. The Nasdaq reported its 10th record close of the new year, outperforming its peers, the Dow and the S&P 500. China slashing tariffs on goods worth $75 billion was instrumental in boosting sentiment. Ranita Young of Bloomberg News wraps up Thursday's Wall Street action in this report.
U.S. stocks closed higher on Thursday, and the S&P 500 saw another all-time high, all happening as China plans tariff cuts on American imports, and positive earnings seem to overshadow any lingering concern about the economic impact of the deadly coronavirus. Now, during the session, we saw Twitter rallying after better-than-expected results, Estee Lauder rising also for the same reason, although Estee Lauder did warn that the coronavirus could impact sales in the third quarter. But Peloton fell after missing third quarter sales estimates. Meanwhile, the U.S. dollar was higher versus major currency competitors, and the Bloomberg Dollar Spot Index was higher. But something else that rose in tandem with those two was WTI crude oil as well as gold. That's a look at your Wall Street action on Thursday. In New York, I'm Ranita Young for Bloomberg News.
All right, let's get you the latest on the coronavirus. China says that the death toll has now risen to 636, while 41 fresh cases have been detected on the quarantined cruise ship in Japan. This after China raised strong objections to the travel restrictions imposed by other countries. Selina Wang and Yvonne Mann of Bloomberg News bring you the latest in this report.
There are more than 600 deaths, more than 300,000 cases. You have more travel restrictions within China, with Wuhan telling residents to begin reporting their body temperature daily. And Tianjin is starting to restrict the residents' movements. That's a city not too far from Beijing. Now, after some confusion on Chinese social media, Bloomberg has confirmed that the Chinese doctor who was one of the first to warn about the coronavirus in Wuhan has died after being infected himself. Now, he became very well known after posting a warning on social media in early December about a SARS-like illness. He was then criticized and reprimanded by the police for rumor mongering online. He has really become a symbol of the Chinese government's failings to act faster in the initial stages, and his death crystallizes the concerns, fears, frustrations, and angers of a lot of the Chinese people and worries about how the Chinese government has responded. Meantime, you do have Beijing becoming increasingly angry at the unprecedented travel crackdown for stoking panic. Right now, you have 14 countries and territories from the U.S. to India and Hong Kong that have put in place these sort of China-related restrictions. And meantime, you also have China now having tariffs on about $75 billion worth of U.S. goods. That takes effect on February 14th, the same time as when U.S. will reduce tariffs on Chinese goods as well.
And Yvonne, of course, we continue to see the economic fallout from this outbreak, and it seems banks in Hong Kong are offering to help. What are they saying?
Yeah. The banks have told the HKMA they will be rolling out some temporary relief measures for their customers and businesses during this difficult time. Measures that include a loan help. They might be helping them restructure the repayment schedules of their corporate loans, a moratorium on residential and commercial mortgages, and fee reductions for credit card borrowing. Banks also offering some extra perks to their frontline workers working in branches. What we learned from HSBC, the likes of Stanchart, going to be offering some of their employees working the front lines extra 5 days of leave, some lunch vouchers as well. This, as we heard last week, the HKMA saying bank branches will be closed by about 20 to 30% of the branches here in the city. This, as we see more threats to business. We learned earlier this morning of Melco Resorts. They are now reassessing all of their non-core investments. The latest is they will no longer be buying that second tranche of shares from Crown Resorts in Australia. Wynn Resorts also reporting earnings after the close in the U.S. The fourth quarter was a surprise loss and lower revenue in Macau, one of their key markets. And here in Hong Kong, yep, another bad news here. Art Basel is canceled. It was supposed to happen in mid-March. Organizers there were citing health and safety concerns, international travel obviously impacted, which would have made logistical challenges severe, they say, when it came to the movement of artwork and the build-out of this event. No surprise, though, but certainly another blow to the hotel and tourism industry here.
Meanwhile, oil prices are edging higher for the second day on hopes that the OPEC and its allies will cut production again in order to support the prices. A panel with technical experts suggested that the OPEC should cut production by another 600,000 barrels per day. James Thornhill of Bloomberg News brings us the details.
And certainly 600,000 tonne cut on top of the 2.1 million that they agreed at the back end of last year would be significant for the market. There's no doubt about that. But as you say, just so much uncertainty around how this virus situation is going to play out. I mean, it could be that we could get to a situation where no amount of cut is really going to offset the impact on global demand. So we are very much in a watch and wait mode. And what I would say, this hasn't been agreed yet. Russia, as is their usual modus operandi in these meetings, is playing hard to get in terms of getting these additional cuts across the line. So we'll wait and see in the next few days. The Russian Energy Minister Alexander Novak has gone back to Moscow to discuss with his superiors about whether they want to sanction that cut. And it strikes me that there's a certain amount of wait and see going on there as well. The Russians want to see how this virus will play out before they commit to those additional cuts.
James, we're now hearing that CNOOC has declared force majeure on the LNG contracts. Will this be the key driver in the short term, just what happens with the virus and those LNG importers and oil importers?
Well, Sherry, that was obviously a huge development. Late yesterday, our time, we got that announcement from CNOOC, or at least we got the sort of confirmation that they'd tried to declare force majeure. Of course, Total, the Total CEO made some comments suggesting he was sort of resistant to that. So that's an evolving situation, one that's got to play out. But of course, LNG prices have gone through the floor amid this growing story with coronavirus. Very low prices. So it's a real dilemma for the producers. That's obviously going to have some impact on the oil market. Oil prices have come down a long way as well, and will probably continue to do so until we start getting some more positive headlines out of China that they're getting the virus outbreak under control, and we start getting some positive news on the numbers of recoveries and that sort of thing. It's clearly going to be a market under pressure, and we could see more of these force majeure announcements, certainly on the back of the CNOOC one.
All right, that's the update on oil. Meanwhile, let's turn to what's making headlines across the globe. Jessica Summers of Bloomberg News brings you the first word headlines.
Oil gave up early gains after OPEC and its allies discussed new output cuts, but failed to reach a decision amid resistance from Russia. A third day of talks in Vienna saw the panel recommend curbing production by 600,000 barrels a day to offset the impact from the coronavirus. But delegates didn't set a date for a ministers' meeting after Russia asked for more time to consider the move. The virus has halted China's path toward overtaking Hollywood as the world's top movie market this year. The infection virtually wiped out ticket sales during the Lunar New Year holiday, a week that's historically been the busiest at the box office. Theaters across the country have remained shut since January 24th, and losses from the collapse of sales topped $1 billion. Now that's according to cinema consultant Artisan Gateway. The European Union will decide on Wednesday whether to impose sanctions on Cambodia over alleged human rights violations. We're told the move would introduce tariffs on all Cambodian exports to the EU. Currently, Cambodia is allowed to export everything except weapons, duty-free and quota-free. EU imports from Cambodia were worth almost $6 billion in 2018, mostly through clothing and textiles. And there's some excitement in the art world that Jeff Bezos might be splashing his cash on a new collection. Art dealer Josh Baer says the buyer behind these two high-profile auction purchases in November was in fact the world's richest man. Bezos has $125 billion to play with, according to the Bloomberg Billionaires Index, and kicked off the year with a near $2 billion windfall thanks to a share sale. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
All right, let's turn to India and look at how we're set up for trade on the last trading day of the week, this time at least. Agam Vakil has joined me to tell you all about that. Well, Agam, we had trading on Saturday, but today is the last day of the week.
Yeah.
How are we looking at the end of the week, though?
Consolidation is what we're expecting, Alex, because we've seen a very sharp recovery over the past few days when it comes to the benchmarks. And, for now, the SGX Nifty is indicating a flattish opening, marginally in the red. Yesterday, we saw another day of trade where we saw a lot of strength return. So, day before, we saw the Nifty reclaim 12,000 and now 12,100. Mid-cap and small-cap indices also moving ahead. The banking indices is also coming up and gaining. In fact, the PSU banking index gaining quite substantially. Coming down to your ADRs, not too much to speak for. It's largely been flattish across, except for Tata Motors, which has declined by around 2.2%. And there you have it. Now we have less than 1% move. So there's a very high chance that we could see some consolidation coming through. And fund flows, FIs have turned sellers once again on a net basis to the tune of 560 odd crores. DIs continuing to buy in Indian equity markets. And as far as your contributors are concerned, we had strength in SBI and IndusInd Bank along with HDFC Limited, which was cancelled out by, well, Kotak Mahindra Bank and HDFC Bank to a certain extent. But we ended the day in the green, and that's what matters at the end of the day. But let's move on and talk about, your futures and options space. There's a little bit of an unwinding. No one is drastically reducing their positions in terms of open interest, indicated by a less than 0.3% decline in OI for the Nifty futures. And the Bank Nifty futures continues to see more accumulation towards fresh longs. Moving on, let's also talk about how things are panning out in the options space. So we have still a 500-point range between 12,000 and 12,500. As one might expect, a little more writing around the 12,000 mark, and that should come up for you on your screen as well. So there you have it, the 12,000, 12,100 calls, looking at a little more writing as well. To talk about your VIX, that's come off even further, down 3%. The Nifty put call ratio has also edged up higher to around 1.48. And in terms of stocks, we are watching out for a whole host of names, but Hero MotoCorp, of course, will react to earnings now because the earnings came in post-market. Cadila Healthcare seeing a very strong day of trade ahead of earnings expectations, or actually it gave up some of its gains. United Breweries and Torrent Power, of course. And moving on, let's talk about a handful of other stocks as well. Indian Oil Corp, SRF and Nalco. A mixed day of trade, Alex, something that we can't expect today, but we're expecting consolidation after some strength returning to Indian markets.
Thanks so much for that, Agam. All right, Samit Sarkar is joining me now to tell you all about the stocks in news. Morning, Samit. What's on your list today?
Good morning, Alex. It's just earnings on my list today. I'll start off with NMDC. Results were largely in line with estimates. Revenues were down 18%. Net profit was down 13%. The EBITDA declined by 26% compared to last year. Average sales realization were down 14%, but adjusting for the Donimalai mines shutdown, the growth numbers were positive for NMDC. Aurobindo Pharma, the results were again in line with estimates. Revenues were up 12%, net profit was down 1%, while the EBITDA was higher by around 11%. Increase in other expenditures and employee cost was largely offset by higher gross margins for Aurobindo Pharma. Profits were impacted by higher tax expense, and if you see segment-wise, the US formulation revenues were up 22%, while the Europe formulation revenues were up 14% compared to last year. Indraprastha Gas, the results were largely in line with estimates. Revenues were up 10%, net profit was higher by 43%. EBITDA came in higher by 23%. Now, lower tax expense and lower expenses and tax expenses aided the net profit of the company. On the volume side, the CNG sales volume were up 9%, while PNG sales volume were up 18%, taking their overall volumes 13% higher compared to last year. Now, IGL did not pass through the entire decline in domestic gas prices and the lower spot LNG prices, because of which the margins of the company was expanded compared to last year. Dalmia Bharat revenues were up 12%, EBITDA came in higher by 11%, while the net profit of the company was down 14%. Now, profit dragged due to higher other expenses and freight charges in the third quarter compared to last year. On the volume side, the volume growth was 14%, while the EBITDA per ton was up 8% to close to 885 rupees per ton. Bata India, the revenues were up 6.5%, net profit was higher by 15%, EBITDA came in higher by 61%. Now, wholesale business channel contributed significantly in this robust quarter that is the third quarter of financial year 2020. The quarter was also aided by innovations, channel expansion and distribution business, LFS and franchise expansion for Bata India. And lastly, United Breweries, the revenues were flat compared to last year. Net profit was down to 2%, while the EBITDA declined by nearly 11%. Now, margins were dragged by higher raw material costs and higher employee costs in the third quarter. Now, because of this, Goldman Sachs in its report said that the volume growth was around 4% versus a decline by nearly 4% versus an expectation of growth of nearly 3%, while the management indicated that the volume growth in Andhra Pradesh had been significantly impacted, which could have led to this 4% decline in volumes.
Thanks so much for that, Soumit. Now, let's stick with earnings and talk about Hero MotoCorp. It sprang a surprise in the third quarter, putting up a strong operational performance despite a drop in volumes. Forum Bhatt has this report.
Well, it was operationally a strong quarter for Hero MotoCorp. This time, revenue was down 11% at about 6,996 crore. Net profit was up 14.47% at about 880 crore rupees. EBITDA was down 6% and margins stood at 14.84% versus 14% a year ago. Now, this time around, lower raw material cost and lower corporate tax rate is what drove the net profit growth for the company. Now, corporate tax rate declined significantly for the company at about 13% versus 32% a year ago. Realizations, on the other hand, was also up 4% at about 45,408 rupees per unit this time. So all in all, it was a strong quarter operationally for the company, which is largely aided by a lower cost or cost savings and lower corporate tax.
All right, on to earnings that you have to watch out for. Britannia is going to be reporting its third quarter numbers, and rising input costs are likely to weigh on its margins. But to tell you all about that, and also to tell you what the key numbers are, Agam Vakil is joining me right now. Agam, what are we expecting for Britannia?
Well, I'll start off with your revenues, which are expected to grow around 7%, 6.6% to be precise. And we are expecting, margins to remain largely flat. Of course, there could be some pressure, as you mentioned, because of raw materials. And net profit likely to rise 21%, but that will also be because of the tax breaks that were announced earlier in 2019. Now, in terms of factors, the company does not report volumes, but the biscuit volumes are expected to be coming at around 4%, which means a lot of price action will also come into play as far as your revenue growth is concerned. That said, the company does have a very strong pipeline when it comes to innovations and newer products, and that is something that could lead growth for this particular quarter. Gross margins, however, are expected to remain under pressure because of an uptick in milk, wheat, as well as sugar prices that as has been witnessed, and that could lead to about 100 basis points contraction as far as gross margins are concerned. But the company has been carrying out cost efficiency measures, which is why we are likely to see margins remain where they are at around 16%. All in all, not a quarter where we are looking at some fireworks, but it could be a steady quarter come through.
Thanks so much for that, Agam. Now, the overall gloom in the global economy is bound to take a toll on Tata Steel's numbers. The steelmaker is expected to see a sharp drop in almost all of its parameters, even after its volumes rose in the October to December quarter. Nikki Mirchandani of BloombergQuint has this report.
Tata Steel is expected to report a subdued quarter end December 31st, 2019. Well, if you look at the top line growth, we aren't on consolidated basis. Why? We're expecting a 15% downtick there. EBITDA performance too is expected to take a hit. The number is seen lower by 40%. Margins are expected to contract. It's a combination of three things that's disappointing show from Indian business, combined with the EBITDA loss of Southeast Asian business as compared to the deteriorating performance of European business, which is expected to weigh down on the performance of Tata Steel on consolidated basis. European business is expected to report an EBITDA of 100 crore as compared to nearly 900 crore that we've seen in the corresponding quarter. Talk about the volume picture, which the company already has reported for the quarter. We're seeing an uptick around the business, at least when it comes to the Indian business, which is expected, which has reported a growth of around has reported a number of around 3.5 MT as compared to 2.97 MT. Bhushan Steel, for that matter, too, has seen an uptick. But if you look at the numbers for Tata Steel European business, they have declined year-on-year basis, and even in terms of Southeast Asian business, those numbers have been flat in this quarter as compared to the corresponding quarter of the previous year. It's the sluggishness in Singapore and the Thailand markets which is weighing down on Southeast Asian business performance of the company. But then the key contributor to Tata Steel numbers would be the standalone business. Those numbers also don't look pretty. If you look at the top line growth, we're seeing a 9.8%. We're expecting rather a 10% kind of downtake. EBITDA is seen lower by 22%. Margins are seen contracting. And one key parameter, one essential number that we like to keep an eye out will be the EBITDA per ton performance, which is expected to be sub 10,000 rupees per ton as compared to 15,000 rupees that was clocked in the corresponding quarter. Two things which actually have weighed on the performance of the company. It's the HRC prices. They have come down substantially, almost 24% year-on-year basis. There would be some relief coming in terms of the coking coal pressures, but again, the spreads, they're expected to weigh on the Indian steel business performance overall. Net, we're not looking at good set of numbers coming in from Tata Steel.
All right, talking about UPL, its India and Latin America business is likely to continue to aid its growth in the third quarter, but the numbers are not comparable. Yash Upadhyay has all of the details in this report.
UPL will be reporting its third quarter results today, but they would not be comparable on a year-on-year basis because starting fourth quarter of FY19, they have included Arista financials as well. Taking a look at their revenues, that is seen coming in at about 9,173 crore rupees. The EBITDA is seen closer to around 1,900 crores in the previous quarter. Margins are expected to be stable at around 20.5%, while net profit is seen higher by as much as 50% on a year-on-year basis, closer to around 700 crores. In terms of the key factors to watch out for, starting off with their core revenues excluding Arista, most of the brokerages believe that number would be in the range of 10 to 13% on a year-on-year basis. What's going to drive this growth is the India and Latin America operations, which are both likely to report a high double-digit growth of anywhere between 12 to 15% in the previous quarter. What's not expected to do well is the North America, Europe and rest of the world business, especially North America and Europe, where due to the adverse dry weather conditions, we may see even a single negative growth in the quarter. However, because of this, the margins are going to get impacted negatively because remember, the North America and Europe are the regions where they get their highest margin from. So these are the high margin markets for the company, and because of that subdued performance, it will have a negative bearing or at least restrict the margin growth for the company. That apart, the currency impact is expected to be largely muted in the quarter. Remember, the rupee only depreciated by about 0.7%, so not a whole lot of change over there. And lastly, we'll also be watching out for the performance with respect to their new launches and the share of branded products. But all in all, the numbers on a year-on-year basis might not be comparable.
All right, now the country's largest power producer is expected to report a higher bottom line in the third quarter as under-recoveries declined in the October to December period. This despite power demand falling sharply. Sharad Dubey has this report.
The generation numbers are going to look a tad bit low. It's expected. Now, going through the numbers, we see the revenues are expected to come down almost 2.8%, coming in at almost 23,438 crore rupees. The net profit is seen almost 23.6% down, coming in at almost 29,048 crore rupees. The EBITDA has been seen a tad bit up, almost 5.9%, coming in at almost 6,966.4 crore rupees. And the margins, we've seen an expansion coming in of almost more than 150 basis points to almost 29.7%. Now, the key expectations which you are looking out for will be the generation is expected to come down by 11.8% to 61.8 billion units. This is due to the subdued demand and the closure of mines and the extended monsoon. Also, we see the plant availability factor is improvement is seen expected to come in at almost 89.7% versus 84.2%. The under recovery is expected to decline, coming in at almost 320 crore rupees from 450 crore rupees in the last quarter. Apart from this, the company did add 2.4 gigawatts of capacity, so that will be something which we'll be watching out for. And the coal plant load factor has also expected to fall between 63.4%. This has been led due to the increase in the private IPP generation and the hydro generation parts. Apart from this, what the key factors we'll be watching out for will be the progress on the joint venture with Power Grid Corporation for an investment in the power distribution space, and lastly, the timeline for the commercialization and the commissioning of power plants going into FY21.
With domestic financial institutions turning cautious on lending, Indian companies turned to foreign lenders with more fervor last year. Now, data released by the Reserve Bank of India shows that there was a 60% jump in external commercial borrowings last year. Advait Rao Palepu has the details.
Funding through the external commercial borrowings route has risen by nearly 62% to over $50 billion in the calendar year 2019 from around $31 billion in 2018. The borrowings through ECBs peaked in March 2019 at around $12 billion, reflecting the stress in bond and credit markets in India after the IL&FS group collapsed in September 2018. While funding to non-banks began to dry up, traditional banks also began to turn cautious and risk-averse. As a result, domestic companies have had to turn to foreign lenders for financing. In January 2019, the RBI brought out a new ECB framework which expanded the universe of borrowers and lenders that could avail ECB finance. The RBI also liberalized the purposes for which the ECB funds could be used. This allowed more companies to borrow from a wider gamut of lenders for a wider range of purposes. Thereafter, in April 2019, the RBI's large exposure framework kicked in, which ensured that large firms with more than 10,000 crores in bank borrowings had to turn to bond markets or overseas lenders. If not, their incremental borrowings from domestic banks would be at a higher rate of interest. Some of the prominent borrowers from the ECB route include Shriram Transport, Piramal Capital, JSW Steel, as well as public sector companies like ONGC and the Power Finance Corporation.
All right, to all the viewers of this program from around the world, thank you so much for joining in. If you're starting your day, hope you have a great one. If you're ending it, good night. Thanks so much for watching.